Good morning, everyone. Today is Friday, April the 14th, and this is the Moneyball Morning Report for the Benzinga Pro platform. So, first off, what I want to tell you is you gotta listen to me at 1.25 or even higher, simply because I have a slow cadence to my words. And so what I try to do is speed it up with Camtasia, so it gets up there to the cloud a little faster. But the last update with Camtasia has really made things really noisy. And I had a great watcher that finally said, hey, these don't sound so good. And I started listening, and it's about the clip speed, because I try to fasten my clip speed because I hate the slow cadence of my voice, and that just drives me crazy, and it drives a lot of other people crazy too. My wonderful friend Fari Hamzi asks me if I talk slow because I think he's stupid, which of course is the furthest thing from the truth, but I do have a slow cadence. So watch me at 1.25 so I can feel better, and then we're all fine and dandy. Okay, so let's see what happened today. So far, the winners in the space of trading are option sellers who maybe or maybe not expected big movement from what the banks have to say. Well, the super regionals and a couple of big houses reported today, and their reportings were fine. They made money. They also had earnings and estimates in line or above. And so that's the game of the analyst coming in, bringing down estimates so that the companies can beat estimates. And this is what is happening. We also had retail sales come out. They're very light. We know that people are nervous. Also, the consumer sentiment indicator came out yesterday. So you have that on the Benzinga Pro platform where I shared it with you. You can see that that sentiment reading is getting really pegged. Now, it has been a lot lower. It's been down at 17% below, but it does tell us that there's a little bit too much bearish sentiment in the market for, bearish sentiment in the market for the market actually to roll over. If that doesn't make sense, remember that sentiment is often a contrarian indicator. We come in and we just, I don't know, if our spouse yells at us or our kid drives us crazy or whatever it is, it sparks that, okay, everything's bad here. And so we're very much in flux and susceptible to media and data really skewing what our mindset is. So let's just look at price. In the last 3 days, take a look at this. Pre-market action today has given us an outside candle. Now, 2 days before, we had an inside candle. And so the order of the day is really going to be the following. If I punch up into 4171 and I hold that area for any measure of time, I'm very likely to bounce into the higher spaces up at that 4177, and really we can have a slurry of sellers all the way up through that we'll have to buy to cover. But my suspicion, because of yesterday's flow, is that a lot of traders who were short are continually unwinding at this particular juncture. The only way you can unwind a short is by buying to cover, and so that's going to give us a little bit of a floor. So what's the floor? The floor is 4157, 4158. So you can think about taking a trade anywhere near 4162, or at least in my mind, 4162, with the squishy stop at about 4157-ish, and then watching for the bounce. Here's the storyboard though. If this loses this area at 4165 after trying to bounce and not getting up over 4171, we'll give back a lot of the motion. And here's the thing. Yesterday, the volume profile was so thin, it's just completely inundated with short covering. Doesn't mean we're not going to see buyers at the bottom, but what it does mean is if the buyers can't stem the flow downward and hold this 41.65 with that squishy bit into 41.57, this market is going to retrace and we're going to come right down and through the candlestick of days prior. Now, this is my suspicion because I'm a bear in the market right now. I am fairly bearish, but I'm a patient bear. And so I think that that's important to consider. All right, let's go to the NQ. I really don't want to talk very much this morning. What we have on the monthly chart with the Q is this continual fade inside of these ranges, right? We hit the low and broke the low of last week. We're coming in. We have got a lower high and a lower low, and right now we're underneath the low of last week. So this is relatively bearish. Now here's the thing. It was also relatively bearish over here. Same sort of thing in terms of coming in through the range. So what are we actually looking for? What we're actually looking for, oh, come on, Trend Spider. Properties. Let's see if this is, oh, I don't want it to be locked. There we go. What? It won't let me unlock it. All time frames, unlock. It won't let me unlock it. All right. Well, whatever. We want to look at 13,209, 13,210. Here we are coming into heavy congestion. Do I suspect that we hang on a little bit and then make some kind of move towards the end of the day? Yes. What's it going to be? Likely short covering. It's likely going to be short covering, and that's going to push the market higher. So what we want to look for is the dips in this space. So one of the things that I use on a site called Place Your Trades is something by InvestaQuant, and it gives us these quant stats, and they tell us, hey, what's it going to look like and what can we do? So it only looks at if you're opening down, what's the probability of closing above your open? And today, it gives you a 58% chance that if it opens down and fades, we're going to end up having some kind of bounce. And so you might go 58%, but it works, especially if you're thinking about pulling back in broad market spaces and finding a bounce. So there's a lot of statistical motion that's probabilistic, motion that says, hey, you know what, this could fade, but I'm going to find buyers underneath. I think there are, a ton of buyers floating around in the space. Okay, so that's probably going to be it for me. All right, for today, have yourself a good weekend. Stay alert, watch the trend, and watch where those supports come in. Take care.